Hey everyone, welcome to the What is Money show. I'm sitting down today with a very popular figure in the Bitcoin space, Mr. Plan B. Plan B, welcome to the show.
Thank you, Robert.
Glad to have you here. We've been talking about this for a few weeks, and I think, as we're recording this in mid-January 2022, I think it's an apt discussion to be had about in regard to Bitcoin price and Bitcoin price action, and the possibility of any, intervention or even suppression into the marketplace. So, I know you've got a deep knowledge of futures markets. You've got quite the storied career, I think, in financial markets. So maybe we could just start talking about gold, like the price of gold historically, how that has, deviated from pure supply demand fundamentals, I guess you might say, just to set the stage for our discussion on Bitcoin.
Sure. Well, maybe first off, I'm not a gold expert, but so I traded and invested in a lot of assets professionally as an institutional investor, mainly fixed income and bonds, mortgages, etc., equities, a lot of derivatives, and structured finance products. But so gold was never on the balance sheet. But I am an old gold bug, so I had exposure to gold myself and follow the market since, I think the 1990s actively. Gold is a very interesting market because if we go back, like 100 years, for example, all the fiat currencies were, and especially the US dollar, of course, was coupled to gold. So the price of the US dollar was actually the number of grams in gold or silver, and that system lasted till 1971. In 1971, that all changed because Nixon got the dollar off the gold standard, and then it went into real fiat, right? Free floating. But until that time, the dollar price of gold was essentially flat. And it was raised like one or two times in the last centuries. I think after the World War and after the 1993 Roosevelt thing. But there was essentially the dollar was the same as gold. So there was no dollar price. It's the same as the gold price. There was, of course, an exchange, but that was more the number of grams in gold and silver. Things started to get interesting after 1971, though, when the connection was gone, when Nixon got the dollar off the gold standard. The reason he did that was to debase the dollar, basically, to print more dollars, to have more spending power as U.S. government. And as you know, of course, there was the Vietnam War at the time and the Cold War going on, just starting. So there was a lot of money spent on space, on army, etc. So he basically had the choice: stop that spending, or get the dollar off the gold standard, which is what he did. And then from then on, the price of gold has gone up spectacularly, and has had some volatility, which it didn't have in the century before 1971. And also there was a lot of stories about manipulation, of course, especially after first the ETF of gold was introduced. I don't know by my head when that was, if that was 1973 or later in the 70s. That was the first ETF, gold ETF. Right after that, the price shot up. It increased enormously. But of course, and of course, there were gold futures. I don't know when that started, but that opened the door to, paper gold, if you will, and all the manipulation that can be done with that. So it's very interesting.
So maybe it'll be useful to just talk about the mechanics of that. How has the gold price And I guess first of all, we should say whether this is speculation or fact. I mean, I've read a lot of strong arguments on the website GATA.org, GATA.org, which is the Gold Antitrust Action Committee, I think. And they have this long history of really uncovering these different price manipulations. Like they talk about the London Gold Pool a lot. But mechanically, like, I guess assuming that it does occur, maybe you could just walk us through the mechanics of how that actually works. How is it that, paper gold is used to suppress or otherwise manipulate the price of physical gold?
Yeah, maybe it's good to talk about two points. The first distinction between real gold, the commodity that you can have in your safe at home or somewhere else, and paper gold or an IOU to gold, which you have at an exchange or in an ETF or in a derivatives, say a futures position. And that claim on gold is, of course, different than the real asset. It's a claim. It's an IOU. So, of course, that makes things a lot easier because gold is heavy. Gold is quite difficult to move, and the portability of gold is not very great. But the IOUs, of course, can be on paper, which is better, or later, since the 80s, on computers, and that's of course even better than paper. So it's especially a lot of convenience in the paper trading, and that's the same with Bitcoin. Of course, it's very convenient to just wire your money to an exchange and not do all the custodian wallet things with keys and all the risk of losing your wallet or losing your keys and then losing your Bitcoins. So it comes with a lot of ease and convenience. So that's, I guess, one thing. And the other thing is, but when you have paper, an IOU, you get all the manipulation and fraud that comes with it. Where you can have a claim on gold that doesn't exist. People can sell you a claim to a kilogram or so, a couple of ounces of gold, where you don't have it yourself. Somebody can sell you gold that doesn't have gold themselves. It's naked selling, and that's what you can do in futures markets quite easily. But also ETFs, depending on regulation, do the ETFs have physical gold? Do they have all the physical gold that they promise you when you wire the money? That audit of the presence of physical gold has always been an issue, even on a government level. So with Fort Knox, for example, how much gold is there? Does the Fed have all the gold that it says it has? Does it really exist in Fort Knox, the gold vault of the US? And of course, the Fed never audits the gold, or at least never publishes the audits of the gold. So for all I know, there is no gold in Fort Knox, and they're claiming to have like tons and tons of gold. So that's one point. It's very easy to manipulate the paper thing because you just say you have it, and if it's not audited, well, nobody knows if you really have the gold. The other thing is the technique that's used for gold manipulation, but also in Bitcoin you can see it as well, very nicely, by the way. Is with futures markets, and also in spot markets, by the way. It's called spoofing. Spoofing is when you put in orders, and but you never have the intention to buy or sell. It's just to scare the market,
right?
And that's done and admitted, by the way, by the Federal Reserve and all the investment banks that were hired by the Federal Reserve to do that, all their gold desks. There's beautiful stories about it, and you mentioned Kata and other organizations that have beautifully written stories about this. But yeah, spoofing, so putting in enormous orders, sell orders basically, to pressure the price down, and then when the price goes down, the orders disappear. So they take when the spot price nears the futures price and the orders that are there to scare the investors, when the price nears that price, they just take out the orders, and that's illegal, but it happens, and you can see it very nicely in Bitcoin as well.
Yeah, that's interesting. So the spoofing, they also call those like sell walls, right? Huge sell orders that you can see in the order book, but they vanish as soon as spot price gets near enough.
Yeah.
Okay, so I guess the logical question here is like, where should we start? Okay. Governments broke the peg to gold, as you said. This really was to, gold applied a financial disciplinary force to government. So by breaking the peg to gold, it opened them up to the possibility of effectively unlimited deficit spending, specifically for the US, right? That we had the global reserve asset. So, and, Greenspan said something to the effect at one point that the inflationary monetary system requires that there be no legal access to a sound store of value. Otherwise, people would just hold the store value, right? Then deal with the inflationary currency. So how does, to maintain that charade, then you actually, I don't think it's speculative. It's like the fiat currency complex actually has to maintain some degree of control, I guess if you want to call it that, on the gold price. How does access to the fiat currency, the ability to produce fiat currency ad infinitum, how does that give them an asymmetric ability to impact the gold price?
Well, one very direct way is that if you can print as much money as you can, then you can use that as collateral, as margin on the futures exchanges, and make it sell any asset, in this case gold, to zero if you want. And it's, so if you have the fiat and you can do that. If you can print the fiat, you can do that. And but by the way, the gold price is, as of 1971, not really relevant to the Fed and the government anymore, because the dollar is not pegged to the gold. So the only thing they don't want, of course, is that trust in the dollar, in the fiat, is lost, and people indeed turning to gold, and the gold price going up. Well, maybe like Bitcoin did, but like 10x, 100x, and growing so fast that all the trust in the fiat is gone. So that's where I guess the main interest of the Fed and the government is, to not let gold rise too much, in that to where the trust in the dollar would be lost. So and that's why they with spoofing and just naked selling, naked short selling of futures, how they manipulated and the prices in a way that they depressed the prices and kept the price of gold low. But as a counter argument, you cannot do that forever. So I always say you can't keep the ball on the water for some time, but not all the time.
Right.
Because people will start noticing, and you're and that's the thing, and I guess the big difference with Bitcoin as well. As soon as people start to feel something is not okay, it's manipulated, they will ask for the collateral. So they will go for the not paper. They will give up the convenience of paper, and they will call for the collateral, and they want to possess the real gold. And that is essentially also what happened in before 1971, right? Because a lot of countries saw the US spending and spending and spending, and were asking questions like, well, yeah, do you have the gold? Yeah, well, we have it, trust us. We don't audit. No, we don't audit. No reports. But especially European countries, and especially France, Charles de Gaulle, prime minister at the time, he didn't trust it, and he started to recall the physical gold. So ships of physical gold were sent from US to France. And then, of course, other countries wanted to do the same thing, which would lead to a situation that was no longer, in which the US would run out of gold as well. So in order to prevent that from happening, they just cut the peg, and European countries were left without the gold. By the way, the reason why there was so much gold, also European gold, in the US is, of course, the Second World War. Because a lot of European countries, including my own country, the Netherlands, but also France, when the Germans were entering those countries, were taking over the Netherlands and France and Italy, all those countries saw that coming from miles away. They had months and sometimes even years in advance, because it wasn't a one-time thing. It builds very slowly. So they moved all the gold across the pond to the US, out of the hands of the Germans. And that's why there was a lot of gold in the US. And the US could be, well, the whole Bretton Woods thing, of course, why the US could be the world reserve currency. But when they asked them the gold back, they had to trust the gold was still there in Fort Knox. And when they asked it back, that's when trouble started. And the same is true in a small way on exchanges. So once investors sense there is some fishy thing going on, some manipulation, or they'll ask for delivery of the physical gold. And there is one bank that does that globally, basically, or actually there's two. There's one in the US and one in London, of course, but London's, I guess, the big one. And the delivery of physical gold is always a little bit problematic, because it's inconvenient, it's costly, and sometimes it is impossible to, because the bank, the central bank, doesn't have the gold, or shuts the possibility, or shrinks the possibility to get the gold. But so that of course is totally different with Bitcoin, because you can ask for the physical delivery of the Bitcoin and have the Bitcoin 10 minutes later or an hour later, and that totally changes the game for manipulation in my view.
Yeah, you bring up great points in regard to the U.S. gold stock, that it really is that kind of geographic advantage that the U.S. has, that caused a lot of gold to wind up here. And it also, some other things I've read about it describe the U.S.'s geographical advantage, having access to European markets and markets in the East, and a lot of coastline, basically, to support a very dominant navy. It points to, I think, that particular perspective you shared. It really points to the importance of gold flows historically, how much they shape geopolitics, right? It's like the U.S. just had this advantage of being in the right place, a good place, a geographic safe haven, really, for gold, to protect it from Nazi plundering, that allowed us to step into the theater of war in World War II and declare ourselves victorious and rewrite the banking rules, where we're at the top of the heap. I think it's such an important story, but it's not often discussed.
Right. And by the way, if I may, the Europeans did the same thing, right? 400 years before that. So the gold was not mined in Europe, because Europe doesn't have gold.
Right.
But in the Renaissance and the 1600s, the VOC times, when Manhattan was discovered, the Dutch and the English and the France, Portuguese, Spanish ships were going to the Caribbean basically, and they took all the gold from the Mayas and the Incas. That was the start of the because they didn't care about the gold. For them, gold was jewelry, and they were happy to trade it again for other things, and so all the gold was shipped to Europe, and then 400 years later shipped to the US back again.
Right.
So it's a very interesting story, and some people are much more knowledgeable about that period than I am. But it's a very fascinating thing, and as you say, it shaped finance and geopolitics greatly. Yeah, absolutely.
Yeah, this undercurrent of a commodity flowing around the world, gold, it like really shapes and percolates up through human action, right? The institutions and the wars that are the wars that take place. It's just very interesting to think. There's a deep connection, right, between how the money moves, where the money moves, and what we're doing. At a very macro historical scale. Let me ask, so this ability then to print fiat, to have a legal monopoly on fiat, then gives you asymmetric leverage to naked sell these assets as you're describing. And, in theory, you could just do that all the way to zero, right? You could suppress the price all the way to zero. But it runs into, I guess, the counterforce to that is the actual demand for physical delivery. Or if there are investors in the market and they think, this thing feels cheap, maybe something's going on here. I'm just going to demand to take physical delivery. But with gold, there's a big cost to that, right? It's slower, it's more cumbersome, it's more expensive to secure, et cetera, et cetera. So to look at Bitcoin through that lens, is it basically just taking the cost and risk of taking physical delivery, like the lower that is, the less suppressible the asset is? Is that the right way to think about it?
Yes. And and so imagine if they make it illegal to possess physical Bitcoin or to withdraw Bitcoins from an exchange and make it all paper Bitcoin. That would open the doors to great manipulation. That should be avoided at all time, because then it would be like gold. Gold has this intrinsic property that it is not easily collectible because it's heavy. The transport is very expensive, and even it's not only the transport, it's also the vaults are expensive, and it has to be insured. So it's about, I guess, 1% per year. It's the cost of gold having in a vault, even without the transportation. So gold has this very intrinsic thing where you'd rather have the paper gold than the physical gold. But Bitcoin doesn't have that disadvantage that gold has. Delivery is easy, delivery is fast, delivery is cheap, and holding it is so superior to holding gold. But once it is illegal or made impossible to withdraw gold, then that opens the door to manipulation, because then it's basically a fiat world, and it's very comparable to 1971, where Nixon basically said, well, from now on, you cannot withdraw the gold anymore. So France, you brought all the gold after the World War. Thank you, but you can't have it back. You'll have to take our fiat dollars, which they weren't happy with. But that's it. So if the exchangers are going to do that, well, of course that would lead to people that have physical Bitcoin not putting it on exchanges anymore. So everybody that has Bitcoin on exchanges loses the right to withdraw in physical Bitcoin and is in a paper world. And that's why it's a very, very good thing to always, not your coins, not your Bitcoin, or what is the saying?
Not your keys, not your cheese, not your keys, not your coin. Yeah,
and there's a very fundamental truth in that and maybe more so than most people realize. But if once that aspect of Bitcoin is lost, then Bitcoin is lost, in my view. So I personally use exchanges only for selling and buying, but not for custody, for keeping the Bitcoin. No, I think that's very, very dangerous. But yeah, so, but right now that makes Bitcoin manipulation very hard versus gold manipulation, which is very easy for states.
Hey, everybody. As you've no doubt learned by watching this show, Bitcoin is the single most important asset you can own in the 21st century. And one of the most important companies in Bitcoin today is NYDIG. NYDIG's mission is to get Bitcoin into the hands of as many people as possible. One of the ways they are accomplishing this mission is by empowering banks and financial technology companies to offer their own Bitcoin products and services. As a true game changer in the industry, NYDIG is safely unlocking the power of Bitcoin for forward-thinking individuals and institutions alike. Led by Robbie Gutman, Yin Zhao, and Ross Stevens, NYDIG has absolutely exploded onto the Bitcoin scene recently and has quickly become a leader in this space. So, whether you are a professional investor looking for asset management services, or a company looking to white label your own Bitcoin product or service, consider NYDIG your single source solution for everything Bitcoin. Taking physical delivery of Bitcoin, much cheaper, much more efficient, much easier, much faster. I mean, just better in every conceivable way. What then does this mean if there is Bitcoin price suppression occurring? Does this mean we face the possibility of a serious short squeeze at some point if it gets to be too aggressive? And as we said earlier, it creates this demand for people taking Bitcoin off exchange. Would that be the expected outcome?
Yeah, I don't think we see manipulation of the Bitcoin price at a level that is sometimes suggested on Twitter. Certainly not like gold, because it's less possible than gold as well. But no, I do see spoofing a lot, of course, and there are some accounts that track the orders or all the bids and asks through time. Very interesting graphs and charts being made, and so you can analyze the dynamics, the bids and asks. But there is definitely spoofing going on, and everybody that trades knows this. The big, indeed, sell walls that disappear once the price goes up. Same with the buy wall sometimes. So there's because the market is sort of unregulated, and spoofing, of course, is illegal. But in Bitcoin you can do it, and so there's a whole scare tactics game going on, and especially retail is very vulnerable there. So that happens, yes, but not in a way that it can suppress price forever, sort of thing. And also, just to give that some data, some underlying, it's, if we look at the big price swings of Bitcoin, those were not caused by manipulation. You can easily attribute those to other things, like macroeconomic news, or the big down in the big drop in last year was caused by the Chinese mining ban, very explicitly, and the big drop in the year before that, in 2020, was in March. That was the COVID scare that was visible in all markets. The current drop, maybe from last 2 or 3 months, is caused by the inflation and the possibility of the rate hikes by the Fed, and the 10-year interest rates really going up from 1.5 to 1.88%. So, and even before that, I think you can attribute all the major drops to some macro or Bitcoin specific event. and not so much to manipulation. So it's Occam's law, basically, Occam's razor. The simple explanation is that's a macro or Bitcoin specific event, and not manipulation. And I know that especially since the end of 2017, when the futures market started for Bitcoin, since then there was talk about manipulation of the Bitcoin price, and that Bitcoin would never see 20,000 again, because now there is futures, blah 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 blah. But here we are at 40,000, and so we did see that 20,000 again, and from my point of view, as an ex-institutional investor, I should say, because I quit my job in March, as you probably know. But I see derivatives markets and futures is always the first as a good thing, as a natural growing up of the market, as a maturing markets should have derivatives markets, because derivatives markets slice and dice the risk and return profile of the underlying asset, and make it more accessible to participants that would otherwise not invest in Bitcoin. For example, a lot of traditional finance institutions, say the ETFs that we now have, the futures ETFs, a lot of the funds are not equipped in their back offices to handle Bitcoin, to handle all the keys and the wallets and the processes that go with it. That not one asset manager can walk away with all the Bitcoins. That's what we have seen in some exchanges, of course, over the past couple of years. So they're very scared about handling the Bitcoins themselves, and they're very happy to pay a premium to not have to do that. The same thing with gold. So some gold investors rather have the paper than having to buy vaults and guard the vaults and insure all the gold in there. So there is a very large group actually of traditional finance people that rather have paper Bitcoin, and futures makes it possible to have exposure to the asset without having the asset. It costs you, of course, it costs you the difference between the spot price and the futures price, which at times can be very large, like 20 or 30%. Right now it's under 10, so that's more, it's normalized, if you will, as it should. So I always like the because futures markets are not something from the last couple of years, or even since we have computers. The Romans had future markets, and I always like that story, because it tells you why the futures markets do add value in the real economy. So it's not all paper trade, not all funny business. It adds real money. It adds real value to the real economy. The Romans had futures on olives. So the olive farmers had a big risk. They would spend all their money on the seeds and the land and all their work in growing the olives the whole year, and then there could be frost in the winter just before the harvest, and everything was gone. So that was a fairly significant, difficult to hedge risk for those farmers. If that happened in the particular region, the weather was bad and there was frost, then they defaulted. So the futures contract, then there were investors in olives, the buyers of the olives, that said, well, what I can do is I can give you 80 cents on the dollar of your future harvest, which is basically a futures contract, and I'll take the risk. So if there's nothing, well, then you have at least your 80%, and I have nothing. If there is a harvest, then I bought it 20% cheaper. But that's what I can offer, and that's how it went. And of course, the big investors could hedge themselves, because they could future buy with these contracts, olive harvest in the south of the country, the north of the country, other countries, and in that way hedge their exposure, because it wouldn't freeze in all countries together, and in that way, you made it possible for a lot more farmers to actually take the risk of investing all they had and working all year long, making the olives in the first place. So without futures markets, there would be less olives. And the same is true for a lot of the commodities, especially the soft commodities, like orange juice, oranges in Florida, and pork belly and all that. Well, all the markets that we see futures right now. So it really adds value to the economy, and so it also does in the Bitcoin market.
Yeah, great point there. I guess we could say it's a risk sharing mechanism.
Yes.
And Dalio has this great vignette in his book Principles where I think it was McDonald's. It was McDonald's because of the chicken McNugget, that he introduced them to managing their cost and revenue. I guess it's their cost curves for chicken via the futures market, so that they could offer the chicken McNugget year round. So it has real impacts on the real economy. Just being able to share risk, frankly, and make it cost more predictable. So looking at Bitcoin then, if indeed, so again, there's been some play in the gold market. There continues to be some play in the gold market. If Bitcoin is indeed something that is even marginally disruptive to gold, right, or is taking on some of the role that gold provided historically, would that indicate that as Bitcoin's market capitalization continues to grow, that in tandem, the incentives for state actors or whoever you want to put in that bucket that would be harmed by the monetization of Bitcoin, don't they have an increasing incentive to then engage in similar price suppression tactics as have been done with gold historically?
Yes, they do. Yeah. Oh, absolutely. Yeah, they do. But they would have less tools to do it.
So what do you think that will look like then? Will they just try to run the same schemes they ran on gold and apply them to Bitcoin, or do you think there would be some novelty to it? How do you think about that?
Yeah, there's actually a very interesting report of the RAND Corporation. RAND Corporation does a report for the DoD in the US, Department of Defense. So it's actually a couple of years old already. So they have a whole paper out there. It's publicly available, weirdly. And it describes in great depth how you can kill Bitcoin from a military point of view. And one of the so it's basically what the military normally does. It identifies centers of gravity for an enemy, in this case Bitcoin, and one of the centers of gravity is, of course, the community. So they'll try to inject spooks or fake developers that try to inject bugs into the software. And there's a lot of stories about that as well, of course. So we won't discuss them here. And the same on social media, of course. The trolls and the scams and the bots. And I can't really pinpoint, of course, if those are state actors, but it wouldn't surprise me if there's state actors in the PSYOPs domain that watch this market and are active in this community, and discrediting people and taking out people from a social point of view, and especially people that the thinkers in the community, and I guess you and I would be on the list as well. So that's one thing, and the other is that, of course, the futures market, indeed, the price suppression. You would open an account with the CME and probably one of the other exchanges, which remind me to grab that back later, is an important thing. But yeah, they would basically try to naked sell the price down through the options market. But on the other hand, imagine they do that, and that would be visible, right? That would mean that the futures price of Bitcoin is lower than the spot price, which it is in certain in some short-lived periods. But that would also mean for the buyers that they can buy Bitcoin lower than the Bitcoin price. So they and it's always a question, do the spot markets follow the future market, or do the futures markets follow the spot market? Which is leading, which is lagging?
Right.
And in the end, it's all about arbitrage. So if there is a way to get the physical Bitcoin through the prices set at the future market or the spot price, the spot markets, if there is a way to get the physical delivery at a lower price than the actual spot market, then I guess with Bitcoin it's very easy to circumvent that short selling, because it will be it will be used by the buyers to get a better price or to get some arbitrage profits.
Right. Is that contango? Is that what the futures price is less than?
Yeah, that's backwardation. If the futures price is higher than the spot market, then it's contango. Then the market is contango. That's how you call it. And the other way around is backwardation. If you see backwardation in gold, that's very bad. That's sort of the end of the world. And normally in futures market, when you see backwardation, that means there is some supply difficulty. There's some war going on, for example, with oil. If there's not enough oil of some gold markets, some gold mines that have less gold than they expected, or some delivery problem, that's when markets stop to function and go in backwardation. There's some very nice studies on oil. So in war times, when the oil wells are taken out, for example, then the prices go in backwardation. But again, I'm not a real commodities expert, but there's some very juicy stories to tell there. But the government could do that, but I guess that would play out very differently with Bitcoin, because the collateral, the delivery of the actual Bitcoin is so easy, and some people will find a way to get it at those very low, manipulated low prices.
Right. Yeah, that makes sense. So, and then maybe there's another, if we zoom out slightly, if they were, again, state actors were engaged in some type of price suppression scheme via naked selling through, fiat expansion, which I'm sure they would run that through some type of vehicle. It wouldn't come directly from a central bank. And I guess assuming these naked sells are being used to actively suppress price, but there's a growing cohort of buyers and holders, that they're kind of just dampening the monetization process or delaying it. But then a lot of that money then that they're putting into futures markets to suppress price would actually be washing out into the real economy too, right? As those positions were liquidated. So this would be creating more inflation, frankly, right, over time, which thus would lead to more demand for Bitcoin. So is that another angle on this, how it would kind of unwind?
I think so. It will ultimately lead maybe to a point where Bitcoin sellers do not accept dollars anymore for their Bitcoin, because that's ultimately what hyperinflation also is. We talked about the Romans. The Romans, of course, had debasement of their denarius coin. So that was a silver coin, and the silver content was reduced from 90% to below 10%. Debasement, basically, and that led to hyperinflation in the Roman era, and but to the point that soldiers, for example, the power of the Roman Empire, they stopped fighting for fiat money, for denarii, denarius, and they asked for gold and land and real estate instead. So I guess and you see that a little bit with Bitcoin as well. I'm very focused on markers that show this. So there's a lot of real estate being sold for Bitcoin at the moment. And a lot of Bitcoiners that really hate the idea of having a lot of Bitcoin in their bank balance, because they know the accounts can be frozen. They know they cannot. Well, especially the big investors or big, but suppose you would transfer like 50 million from your bank account to a bank account in New York or London to buy a nice piece of real estate. At least from a European perspective, that would lead to probably your bank being frozen, your account, a lot of questions from the bank. Probably you have to prove where the funds came from. The burden is on you, and you probably, make a lot of lawyers' costs before you even, and a lot of time was wasted before you can do the transaction. Probably the real estate is gone. So a lot of the nice real estate is, and I know that's also true in Dubai, for example, in the Middle East, is settled in Bitcoin because the transactions go through, and it's a lot easier. It's the deal can be done with Bitcoin and not with the dollar or the euro anymore, because that's totally weaponized, of course. So I guess that's, you see a lot of people asking for Bitcoins in return and not fiat, because fiat, why are you in Bitcoin in the first place? Because all the problems with fiat. So
Yeah, I mean, to your earlier point too, it's so much more economically intelligent to use Bitcoin, right? It's 24/7, settle within an hour, bearer instrument, final settlement, no bullshit, no questions. Like, it's basically the most, I've described this to people too, the fact that the bank can seize your money, or that you can't access it on weekends, or that if you try to send a wire of a certain size, you get asked questions. All of these are limitations and constrictions on your property rights in money.
Yes.
I like to have an actual property right is like you own the thing outright. You can do whatever you please with it whenever you want. Exactly. So it seems somewhat intuitive once you understand Bitcoin that people are going to opt for this monetary system where they have a very strong property right versus the fiat system where you have almost none, really. I mean, you get property rights in your USD, but it's at the leisure of all these intermediaries, the state, there's a lot of frictions to sending it internationally, as you just described. So that's really interesting. So, all right.
Yeah. So it's basically a bearer instrument against an IOU, and Bitcoin being the ultimate bearer instrument, and fiat being just, US dollar, just an IOU. And it's a very interesting dynamic.
Yeah, I reflect here on Szabo's description of money as a trust minimized, medium of exchange. So it's like whichever money enables you to trust the least amount of people is the one people will opt for.
Yeah. And I'm personally, I guess you have to learn that as a person and actually feel it by having Bitcoin and fiat, and then being afraid of losing the fiat. Because your bank is going to do funny stuff, or your government, which is, you hear that a lot. By the way, I hear that a lot. So, and getting to know Bitcoin and see how it works and how easy it is and how secure it is. So, I'm personally at the point that I'd rather have Bitcoin for services or deals than fiat, because. And you hear that with a lot of Bitcoiners. For example, the ones, I don't have a newsletter, but suppose you have a newsletter, all the hassling, all the stuff and harassment of banks with your cash flows. It's horrible. It's a horrible experience. And I guess every business has that. Maybe it's worse in Europe than the US though, because it's in Europe, there's a lot of businesses closed down by the US because alleged contacts with Iran or some person or whatever, and they just freeze your bank account or close your connection with the SWIFT. So it's you're done. Fairly big companies as well. So it's I guess a thing that's more people outside the US are more aware of than inside the US. I guess that doesn't happen too much in the US.
Yeah, to your point, it's like the pain is what informs you, right? It's like you don't. Yeah. That's why I think so many people outside of the US immediately get Bitcoin. Like, especially if you live through any type of inflationary environment, you're like, yeah, of course, a money that can't be manipulated is preferred.
Well, that's an excellent point because, for example, the European case or close to Europe would be Turkey right now, experiencing 40-50% inflation in several months. And the more American example would be Venezuela, of course, having the money taken out by the money printing and dropping hundreds of percents a year, or it goes 50% down every month or something. But from Bitcoin's point of view, for example, right now the price, we see the price as low. We feel the price is low at 40, but basically it has been at 50 all year long, plus or minus 10. So between 40 and 60. So that's 50 plus or minus 20%, which is nothing from a Venezuela or Turkish perspective at the moment. You could easily have the minus 20% versus the minus 50% in a couple of months or even 1 month. So yeah, I think we sometimes forget the emerging market perspective on even in Europe, but the real emerging market perspective for people in Africa and South America, for example.
Yeah, and we are, even the advanced economies of the world are now barreling towards that, right? The expansion of fiat currency is at an unprecedented scope, scale, and rapidity now. I mean, we've never had this coordinated debasement worldwide at this pace. So
7% inflation today, the number.
Yeah.
Year-over-year inflation in the US, 7%.
The official number, which is also a BS number, but yeah.
Yes.
Highest print in what, 40 years?
Yes. Highest print in 40 years. But indeed, if you look at healthcare,
assets,
a lot higher than that.
Yeah, for sure. And one trick there is you can denominate S&P in gold or denominate it in Federal Reserve balance sheet changes year over year, and you'll see a much more accurate picture.
Yes. I like to view the Bitcoin price in gold as well.
Yeah.
For that exact reason. Just take the dollar out of the equation. No QE, no nothing, and just gold.
Yeah, that's a great way to look at it too. So maybe we could just close out on this, given all of so there's a deep history on gold price suppression. It's done on a coordinated scale too. I would encourage people to read the book Gold Wars by Ferdinand Lips. That does a great job of going through the history of all of these gold price suppression schemes. Governments did that to become unrestricted effectively, right? They were subject to this financial discipline of gold, where if you're irresponsible with monetary policy or regulation or taxation, gold would leave your country, right, on a gold standard. So there was a check and balance there on government action. So clearly governments had an incentive to throw that off, which they've effectively done at this point. So now, although maybe, Bitcoin price suppression, maybe, to your point, maybe it's not that big of a deal yet. Maybe it's not happening at all. But as it continues to grow, there will be greater incentives to suppress the Bitcoin price, and therefore greater likelihood that those actions are being taken. So as a punchline to the audience, like, what do we do about it? How do we prepare for it? I'm guessing the simple answer here, like the simple countermeasure, is just hold your own Bitcoin, right? Because if everyone's holding their own Bitcoin, then there is no paper Bitcoin, and then there is no lever to manipulate the price. Is there anything else you would think about or add to that?
Yeah, diversify. I know it's a ugly word, but it's always good to diversify a little bit, because it's not only prices going down, but markets can go down or close. Maybe for Bitcoin that's a bit difficult, but bans or making Bitcoin illegal, closing down exchanges. That's something we have seen in the past. And if you depend on your Bitcoin, well, right now we're in a moment in time that we still need fiat for most exchanges, or most other transactions. So until the time is there that most people accept Bitcoin as legal tender, baby, but for their services and trades, until that time, it is wise to diversify a little bit into real estate, gold, have some fiat for liquidity, for short-term purchases, so that it doesn't disrupt your life if something happens. That, I guess that's always a very smart thing to do. And with Bitcoin, indeed, I guess the next level would be, right now it's an asset. It's an investment. You can trade it. You can make money. You can trade it, but really use it as payment for your services. That is something that is interesting to look at. That is also a form of hedging, because it makes you less dependent on the fiat world. If you could buy your food and fill your car, your gas with Bitcoin and get paid in Bitcoin, well, then the whole dollar doesn't matter that much anymore to you. If you could rent or buy your house in Bitcoin, whatever, the dollar is not important anymore. So that's the next phase, if you will, the next level of Bitcoin maturing. The whole case of El Salvador is a big step towards that. So I really hope there's more countries indeed following that lead, because that would always create some spots in the world where you can always trade your Bitcoin and buy a house with Bitcoin and buy food with Bitcoin. And then the entire concept of the dollar or fiat goes away. The need for that goes away. And maybe one more thing, by the way, the U.S. perspective versus the European perspective for futures markets and maybe also option markets, derivatives markets for Bitcoin could be different, because Americans are forbidden to, or it's illegal for Americans to, and correct me if I'm wrong, to trade on unbanked exchanges. So exchanges like BitMEX or Deribit, where you can only send Bitcoins there, trade whatever you want to trade, and then withdraw in Bitcoins. They don't have a fiat on and off ramp. And for Europeans, that's legal. So we do that all the time. We just send Bitcoins somewhere, trade some stuff, and then get the result back in Bitcoin. And so that's so that whole withdrawal thing, that the risk that you cannot withdraw if you enter a futures contract. So when it's cash settled, for example, in the CME, right? I think the CFTC makes it compulsory to go through CME for Americans. I don't think there's any other big exchange at the moment that does futures and options that you can access. But for a lot of people outside the US, there is, and these exchanges flourish, and they don't have the risk of non-withdrawal, because they're all Bitcoin based. There is no fiat, and so I think the risk could be the manipulation risk could be higher perceived by US citizens than non-US citizens.
Yeah, it's great advice. I mean, the more, I guess you could just actually move your life onto a Bitcoin standard, right? Where your inflows and outflows are Bitcoin denominated. you just gain all of those advantages of using a money that, you know, affords you maximal individual sovereignty, and it never closes down. You know, it's immune to the opinions of anyone, frankly, which is very powerful.
Yeah, and I don't want to make it too geopolitical, but if the US makes it too wild in for example, and it doesn't do that, right? All the things I see are good things, especially in Florida and Texas and all the states that accept Bitcoin, and the debate that's going on in the Senate and Congress is in accepting and regulating and taxing Bitcoin, not banning Bitcoin. But if a state, especially America in this case, makes it does two strange things, in that you cannot withdraw any Bitcoins anymore, or a regulation or manipulation is too wild, people just move. You could hedge that risk by moving outside the US, by going to Europe and have access to the markets. Right now, the US markets are the biggest in the world, and companies go to the US. Capital goes to the US, brains go to the US, because the access to capital markets. But when they kill that, when they make it more advantage or better to use capital markets outside of the US, which would be a big mistake. But countries have done that before in the past. Then the access to capital markets will be superior outside the US, and people, companies, brains, capital would move, and that is a theme that is very top of mind by a lot of Bitcoiners, at least, the nomad style of life, and especially in the current geopolitical setting. So I think there's a risk for the US as well.
Yeah, there certainly is, and you know, I'm going to try and maybe talk about this a little bit more, but it very simply is bounded downside and unlimited upside for the US to just start buying Bitcoin, right? It's like, you have access to infinite cash, even per who is the Federal Reserve guy that actually said that, to buy something that's strictly finite. I mean, it's that obvious. You should, even if nothing more, as a means to hedge yourself against its success, you should follow that path.
Yeah, it's so obvious, but so difficult to do, I guess, for a country that has grown, that is made big by Silicon Valley, all the tech companies in Silicon Valley, and all the banks in New York. The banks, of course, see Bitcoin as a competitor, so they're against, and they'll be against Bitcoin. So it will take quite some courage from leadership of the banks, and thus also from the political scene, to make that change to Bitcoin, even if it's as logical as we think it is for them with their vested interests. It's almost impossible to change their existing cash cow business into something new. And the same for Silicon Valley. Yeah, all the IT is in Silicon Valley, but Crypto Valley, where's that being built at the moment? Is that Singapore or Switzerland? Or well, if you make it crypto friendly, you'll attract all the developers and the capital and the venture capital, etc. Like, I guess El Salvador does a great thing, but it's of course a very small country. I guess Florida and Texas are great examples, and and other states as well. I always forget that name of the state where Yellowstone is, but
Wyoming.
Wyoming does beautiful things legally with Caitlin and Cynthia. Yeah. But so a country, and especially the US, can make the right decision or historical failure by accepting the logical thing, Bitcoin, or by banning it like China did. It's beautiful to see, actually.
Yeah, it really is, and Bitcoin can be a scary new topic, I guess, to people that are just accustomed to traditional or legacy financial infrastructure. But, again, hopefully on this show, at least, I'm trying to really get down to the bottom of it. And at the bottom of Bitcoin, I've found life, liberty, property, right? It's what Western civilization is based on. We now have a very strong implementation of that. So I'm hoping that these ideas will keep percolating and get into the minds of American policymakers, as they are to some extent. We've got, Senator Loomis and others, that advocate for this, like a very principled approach to governance.
Yeah. And I really, maybe it's good to know. I'm very hopeful because I know the discussion is going on in a lot of governments and regulators in different countries. And I talk to a lot of them in Europe, but also in the US and Canada. And those are more private settings with a lot of people from the Bitcoin community and from the traditional finance or regulator community, governments as well. So the talks are good. And I think the tone is good. And I guess the stakes are known. And I guess most politicians know that it's not wise to kill a promising innovation.
Right.
That's a risk. But they also care about, of course, money laundering and terrorist financing and all that stuff. So we'll find a solution somewhere.
Yeah. I've got this, I guess, optimism that Bitcoin, the incentives sort of get between the cracks of the established order, where these individuals within government are taking some position in Bitcoin, right? Even if it's just speculative. But in doing so, it kind of reorients their incentives towards it, right? Where they may have been resistant to it originally, they may actually start to advocate for it a little more.
Yeah, and they're very clear incentives. I guess if you're the new crypto valley, you attract all the brains, all the capital, and all the benefits that come with that. So, do you want to be the next crypto valley and New York heart of the financial system in the world, or do you want some other country to be to get that advantage?
Yeah. I think it was Naval said something like, if New York does not embrace, Bitcoin and or crypto, that they're going to end up like Detroit.
Exactly like that. Well, and look at the mining. What happened? China banned it, so they lost their most strategic control on Bitcoin, the mining. Then Canada basically scared the miners away as well, because they have beautiful hydro power, almost zero costing electricity, but some political force doesn't want it because of some misinformation probably. And then Texas and the US, but mainly Texas, they welcome all the miners with the flare gas, and one rig after another is powered or is powering the mining rigs. It's beautiful. It's smart as well. I think that's one of the things that America does very good, and Canada, for example, does very bad.
Yeah,
so no vision there.
Yeah, that's why Bitcoin wins, right? It's just so formless, and it incentivizes everyone to cooperate with it. So, Plan B, man, thank you for doing this. You've answered a lot of my questions and broadened my thinking on what in the heck's going on right now in regards to Bitcoin price. My audience probably already knows who you are, but just in case they don't, could you please let them know where they can find out more about you or your work?
People can find me on Twitter. That's Plan B at 100 trillion USD. That's 100 trillion USD. Beware, there's a lot of scammers. There's a lot of impersonators. I have at least 30 impersonators that try to be me and try to send you a DM and then try to get your money. So make sure you have the right account. It has over 1 million followers. Most scammers don't. Actually, none of the scammers does. But Twitter is the thing. And I have a website. It's planbtc.com. With all the articles and the latest podcasts. So you're our podcast is also going up there. And yeah, well, thank you very much. It is a very interesting topic, and I'm quite sure this isn't the last word on that topic.
I think you're right. All right, man. Thanks so much. We'll do this again sometime soon.